Have you ever wondered why multifamily assets are becoming the go-to investment in times of economic uncertainty? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In recent years, Alberta's multifamily market has risen to prominence, attracting attention from across the country, including major markets like British Columbia and Ontario. According to a recent report by Avison Young, multifamily assets have become a safe haven for investors looking to weather economic uncertainty, especially amid the ongoing trade war. The report highlights the appeal of purpose-built rental housing, offering investors the prospect of a stable cash flow asset right from day one, with a positive outlook for rental rate increases. From 2023 to 2024, investment in the multifamily market across Canada improved in sales volume. Although the average price per unit cooled from a peak of around $422,000 in 2023 to approximately $300,000. This shift has been largely influenced by international immigration and interprovincial migration, particularly concentrated in Alberta's key markets, Calgary and Edmonton. Avison Young's Edmonton multifamily team member Jandip Diol noted that the pandemic highlighted the essential need for housing, spurring investor interest from British Columbia and Ontario into Alberta. This influx of investment activity has been particularly evident as both Calgary and Edmonton have experienced significant rent growth over the past 24 months, a trend not seen in over 15 years. While rents have surged, they remain more affordable than in many other major markets, which has only increased investor interest. Rents have moved more in the past 18 months than they have in the past decade, said Haig Basmajian, an associate vice president at Avison Young Calgary. This growth has put Alberta on the investment map for the first time since 2013, drawing interest from out-of-province investors. Despite some similarities, Calgary and Edmonton present distinct opportunities and challenges. Calgary has experienced rapid rent increases and unprecedented housing completions, with over 5,500 units completed in 2024 and even more expected in 2025. In contrast, Edmonton's market is larger and more stable, lagging behind Calgary by 9 to 18 months in terms of rent growth, but maintaining tight vacancy rates below 5%. Institutional investors are also starting to take note of Alberta's potential. While private investors currently dominate the market, large players like REITs are beginning to look at Alberta anew. Diol from Avison Young mentioned, deals in the Alberta market are accretive, whereas they are not in British Columbia and Ontario, and that's why you've seen attention diverted our way. With increased buyer interest and upward rent trends, prices have naturally been affected. In Calgary, the combination of rent growth and competition has driven up per-unit pricing. In Edmonton, the market has yet to fully catch up to rent increases, but valuations are expected to peak by the end of this year. The current MLI Select program by the Canadian Mortgage and Housing Corporation has been particularly beneficial for Alberta, offering high-leverage financing that has enabled private investors to engage in large-scale deals. This program, combined with the absence of rent control in Alberta, has dramatically changed the investment landscape, making it an attractive market for both private and institutional investors. As Bradley Gingerick from Marcus & Millichap's Institutional Property Advisors team noted, when Montreal, Toronto, and Vancouver are hot, Alberta is not. When Alberta is hot, the rest of the country isn't. For the past year and a half, Alberta has been on an upward trajectory, and it looks set to continue its growth throughout this year as well. Now let's talk about an exciting development in the real estate investment trust sector. A proposed Canadian real estate investment trust, GO Residential Real Estate Investment Trust, is making headlines with its strategic move to go public by launching a portfolio of luxury multifamily units in New York City. This ambitious endeavor is detailed in a recent report by Gary Marr from CoStar News. The trust has assembled an impressive collection of over 2,000 luxury apartments, primarily located in Manhattan. This portfolio is valued at billions of United States dollars, making it a significant player in the luxury rental market. The move to list on the Toronto Stock Exchange highlights the growing interest in cross-border real estate investments, particularly in high-demand urban centers like New York City. This strategic initiative by GO Residential Real Estate Investment Trust reflects the increasing trend of Canadian investors seeking opportunities in international markets. With luxury apartment buildings like the American Copper Buildings and One Sutton Place North included in their portfolio, the trust is positioning itself as a formidable competitor in the New York City real estate landscape. The decision to focus on luxury multifamily units aligns with the broader market trends we've been observing, where investors are drawn to assets that promise stable returns and potential for appreciation. As the demand for high-end rental properties continues to rise, particularly in major cities, this move could prove to be quite lucrative for GO Residential Real Estate Investment Trust. It's fascinating to see how Canadian investors are expanding their horizons beyond domestic borders, leveraging their expertise and resources to tap into lucrative markets abroad. This cross-border investment strategy not only diversifies their portfolio, but also positions them to capitalize on the robust demand for luxury rentals in one of the world's most dynamic real estate markets. As always, it's crucial for investors to conduct thorough due diligence when exploring international opportunities. However, the potential rewards in terms of stable cash flow and asset appreciation make ventures like these highly appealing. It'll be interesting to watch how this plays out and what impact it might have on the broader Canadian real estate investment landscape. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.